Once again, Trump is crashing the stock market, right? We were up earlier in the day. We're almost back to new all-time highs. And then he decided to get on TV. Yes, everybody needs to listen to me. I have a very important announcement to make. And it is, we're going to a trade war with China. Which is, of course, pushing the market back down. We're down about 1 percentage point right now, ruining tons of people's plans, but not my plan. Maybe not your plan either, because like Joe over here, our Outlier University graduate who happens to join us, we have a plan in place for when the market's not working out. Joe, how's it feel right now with the market, of course, taking a dip every time Trump talks?
Well, as you can see behind me, everything's on fire. But it doesn't matter to me because I'm in cash. I'm sitting out. I'm not messing up my account. I'm following my plan. I have absolutely no worries of this news. Like, I will have no worries until the signals say get in. I'll be in cash.
Yeah. I mean, sit in cash and don't F up is real. It is specifically designed so when you don't have any signals, you don't mess up your account, right? It is an intentional way to get out of the way, to be in a risk-free position. And if you're an SGov, actually earning interest in the meantime. So let's see what Trump had to talk about today. Let's watch this video together. Trade tensions between the US and China, they're on fire, just like Joe is right now. Let's watch this together.
The United States and China would effectively stop trading. A stark reminder from the stock market on Friday that 155% tariffs result in a trade embargo. And just like he learned over the summer, that does not bring in revenue, that does not boost the US economy. Tariffs are taxes and a 155% tariff rate, which is what would happen if he followed through with his True Social.
Everybody needs a 155% tariff rate. Anything from China is going to be 155% more expensive. It's going to be great for everybody involved. It's going to be tremendous, right? Not the price. Of course, the price won't go up. Just the tariffs. Only China will be paying for this. In fact, they'll probably buy the wall. They'll build the wall as well when we're doing that. The Great Wall of San Francisco, the Great Wall of the Pacific Coast. That's the wall that they're going to be buying right now. Thanks a lot, China.
Post on Friday is the United States and China would effectively stop trading in a whole mess of goods, $550 billion worth of trade. And so that learning process had to play out again. And that's where we are right now. So Trump sort of predictably, and as the street expected, walked it back on last night. And now we are in sort of wait and see mode. It's my view that expectations had gotten too far over their skis for a Trump-Xi meeting in South Korea at the end of this month. And they had to reel that back in, which is what the president did on Friday, and then reeled that back in on Sunday.
I mean, Scott Besson is...
So, like, the first time that he tweeted about this was on Friday. That was that big, ugly, nasty red candle. And boy, the Discord lit up on that. The Discord went absolutely apeshit, right? Well, because they got hit by a candle that nobody saw coming. Nobody saw that coming. It was reminiscent of a very elusive type of creature. He lives on the slope of hope, right? It's called the monkey with a hammer. And it got monkey hammered bigly on that day. However, you know, we got all the sell signals the following Monday and got out, went to cash, made a little scratch on the trade, right? It was up about 2% or so, 42% annualized. I'm not upset about that. That's part of the game, right? Part of the game. But now he's like, we had too many green candles. Let's do some more red candles. What do you think over here, Joe?
Well, like I was telling you yesterday, we've got echoes of Chris.
Try it now.
There you go. Yeah, like I was telling you yesterday, I was really feeling the FOMO, and I was just all day watching things go up, and I was like, man, I wish I was in this. And then at the end of the day, the candle goes red. Today, the candle went red. So it just goes to show, if you follow your plan and you ignore the FOMO, you're probably going to end up on the right side of the coin. Just keep telling yourself, follow your plan.
Hang on. I have a slide for this. By the way, big announcement coming in just a moment. Here we go. Pros focus on managing risk, implementing processes, and maintaining the discipline needed to consistently execute their plan, knowing that if they get that right, the money's going to take care of itself, right? So working with Steve Burns, he was one of my most important mentors. He was basically like, look, Chris, if you have a profitable trading plan and you follow that profitable trading plan with consistency and discipline, you're going to have losses. You're going to have wins. But at the end of the year, you should, there's dangerous word in finance, but if all goes to plan, given enough occurrences is really what we should say here. Given enough occurrences, there should be there should be more money in your account than at the beginning of the year. Now, when I say given enough occurrences, because every trading plan needs to build in losses. It needs to build in losses. If you're not building in losses, you're not planning on trading, right? Because Joe, I'm not going to lose. Right? How can I lose? Right? The stock, it should go up, right? It has to go up. Right? I did all my fundamental analysis, Joe. It must go up. The price target just got raised to $310 a share on AMD. I got nothing to fear. All I'm doing is picking out the color of my Lambo. That's the plan, right? However, the reality is that we don't know what's going to happen, and that is why we build in a worst case scenario. The worst case scenario is just getting out of the way, right? Getting out of the way. And like Mark had in this post right here, right? Given enough occurrences, the money takes care of itself. Any one trade, the outcome of that trade is going to be random, right? There can only be four possibilities: big win, small win, break even, or small loss. There's only those four possibilities, but we don't know where on the spectrum it's going to fall. My wife also says I'm on the spectrum, so I don't know. Maybe that's where I fall as well. But we don't know where on that spectrum it's going to fall, right? It could be multiple losses in a row. Like the family account that I started, unfortunately, happened right. We had 2 losing streaks this year. I'm still up like over 40% at this point, though. It happened right at the beginning of the first losing streak when my family gave me funds to invest. And it's like, it was just timing. There's nothing that I could have done other than follow my plan. And the timing was just not perfect, right? Of course, it's best, and we can't control this part. It's best to start off on a winning streak, build up that account, and then you can absorb some of those losers, right? However, we can't choose when the winners and when the losers come through. All we can do is just follow the plan. All we can do is follow the plan. BKTX, super sucked. But if you rolled it, and of course, keeping that position size in check, for me, it wasn't a big loss, right? It was a loss. I'll call it a medium-sized loss, Joe. I'll call it a medium-sized loss. And it sucked, but it's also part of the game. And it's also why we're never trading healthcare again.
Yeah.
Okay.
That's another one that you need to be aware of your entry, the bid ask spread, right? You need to be aware of your entry price, because I actually made money on that VKTX because, again, you taught us about the spread and getting the right price, and you've taught us about rolling, and the way I ended up rolling it, I got out high on it, right? And between those two things, I actually took a profit, so it worked out great for me. But it just goes to show that trades can go wrong amongst 2 people trading the same asset if they're not aware of what the factors are.
Absolutely. That makes perfect sense, Joe. And congratulations for pulling that win, by the way.
Thanks. It was a small win, but it was still a win.
How dare you? How dare you? But again, having a plan in place will let you know when it's time to be aggressive. Having a plan in place will let you know when it's time to be defensive. And having a plan in place is going to help you and me both do incredibly well in the U.S. Investing Championship for 2026. And this is the big announcement that I wanted to share with everyone. We want you to sign up and participate in the U.S. Investing Championship. Now, we are actually going to be doing an Outlier only competition, but we want you to sign up and we want you to compete for 2026. All that we ask is that you put in your name, and then it looks like you can add in whatever sort of classification, maybe nickname, company affiliation, whatever. All that we ask is that you put in your name, like Joe, Mr. Joe, and Outlier. Christopher Ewell, Outlier, right? That's what we want to see. We want to overwhelm the number of participants on this, not just in year 1, but in year infinity. We want to do this forever. No, you don't have to be a U.S. citizen. You don't. We looked at the rules this morning, and I mean, some of these numbers aren't all that big, right? I don't want you to feel like you can't participate, because like Mr. Garg right here, he's only up 1.5%. Mr. Singh right here, 2.2%. Tito Panduro up 2.6%. I would bet that your account is better than those three. And you can be on the board. You can be on the board, right? I'm going to be participating in the enhanced growth division. And by all means, that's anything. It is futures, it's options, it's anything you want, right? And the minimum account size, actually, there is no minimum. I thought there was, but we were watching a video on the rules this morning, and they will, if the minimum account size is typically 20,000, but if you have less than 20,000, they're going to give you a handicap, basically, and allow you to still participate. So it's going to be great. But you're not allowed to suck. Okay, Eric, that's the thing. If we're putting your name and our name together, you're not allowed to suck. That is not okay. All right. I only want you to participate if you believe in your plan. If you believe in your plan. By the way, the participation fee for this is about $400. That's more than the cost of the annual subscription to Outlier. That is how inexpensive Outlier is. Okay. So I want you there. I'm going to be there. I was describing this morning. I'm going to be like William Wallace without a shirt on, face painted blue, and I'm going to be holding the Outlier flag up at the top. Joe's got it on his hat, so everybody knows what it looks like. I'm going to be holding the Outlier flag, shirtless, face painted blue, yelling, "Freedom! Freedom!" That's the plan. That is the plan. I want you to be there. I want you to be there. So go register over at financial-competitions.com. I cannot wait to do that with you. So in the meantime, welcome to the Outlier Trading Room invitation only live stream. Now, this is where we help you save time, make money, and start winning with less risk. And you should probably go ahead and subscribe if you haven't already, if you're watching this on the replay. We're going to go through those profitable plans here, plans M, A, ETF, and sit in cash, and talk about if we need to do anything today, right? So listen, if you want normal returns, this is not the place for you. But if you want outlier returns, you're in the right place. So there are 4 plans: M, A, ETF, and sit in cash and don't F up. M and A are offensive aggressive plans. Plan ETF is our defensive plan where we're still in the market. And then plan sit in cash and don't F up is exactly that. Go to cash, let the market do whatever the market's going to do, and just have no risk on the table. Have no risk on the table. And we're going to do even better. We're going to do even better than that. We haven't finalized what the grand prize amongst our outliers will be. First, the grand prize is the fact that you're going to compete. You're going to have a plan in place that's profitable. You're going to build so much confidence in yourself, and your account is going to grow bigly. Your account's going to grow bigly from this. And we will give out prizes as well. Isn't that cool? Isn't that cool? So let's go through these guys right here. Now, before we do anything, we need to reduce risk before adding new trades, because the most important part of the plan is planning on the plan, not going to plan. All right. So we are in plan plan sit in cash and don't F up right now. The only exit signal is plan M or A or ETF setting up. Okay. So then we need to go listen to what the market's telling us. Okay. So if the market is true on all of these, then we proceed with plans M and A. If not, we go to ETF or sit in cash. Okay. So a SPY and a bullish trend. Let's go check that out. We go into Outlier. We can pop open SPY right here. And when it's green in the background, that means it's in a bullish trend. We make it far too easy on you to tell. In fact, you could even go up here and see the market is trending up or down. This is a bullish trend. All right, that's a great start. Next, the SPY having a buy signal. The S&P 500 actually has a sell signal. That's not good. That's not good. When the market has a sell signal, that doesn't mean all hell's going to break loose and it's going to crash. But what it is telling you is the market is not cooperating. Now, why do you care? 40% of the move is due to the market. Of any stock, 40% is due to the market. 30% is due to the sector. And only the last 30% due to the stock itself. So if you have found a stock that's bucking the trend, I'm going to ask you for some of those stocks in a little bit. Those stocks could be even bigger and better and amazing if they had the sector and the market working with you. So go ahead and put some of those in the chat. We'll be taking a look at those. But we don't have everything lined up right here. But let's continue on, right? SPY is on a sell signal. SPY, fear and greed heat map under 70 and rising. We're down at 62.56. Call the fire department. It is going down fast as possible, right? We need the fire department to come and rescue the spies, fear and greed heat map down here, because this is the lowest reading since June. Since June, we have to go back literally almost 6 months to find a greed rating that low. 62 was last in, July 3rd. July 3rd. That was the last time that we had a reading this low. This has been so elevated for so long. So, and it's going down as well. So we do want that. Then let's talk about breadth. In fact, I mentioned yesterday, I'm more bearish on the market than bullish right now. Joe's over there with FOMO fever. I'm over here like, for me, this is not the place. This is not the place. Joe, if you were to come to the market breadth screen, tell me what thesis you would build on this. A bearish thesis or a bullish thesis, and why?
Bearish, because I go to the center of the screen, a bit to the right there, and I look for the green line. And the green line under the orange line is telling me that there's more stocks with sell signals than there are buy signals. And I know bearish is under that orange line. So
Right.
It's not going to be bullish until that green line is over the orange line.
Right. And that green line, the percentage of stocks with buy signals is what that green line is measuring. So right now we only have 20.15% of the market with a buy signal, meaning 80% of the market sitting on sell signals. Joe, if 80% of the market has a sell signal, do you really think that we've got strong breadth? All the ingredients necessary for an easy, effortless trading plan?
No. You want the trend going up. You want the wave carrying you in the right direction. You don't want to be fighting the wave, getting bit by the undercurrent. You don't want to be
That's
there.
fair. What else do you see on the screen, Joe? What else do you see on the screen that's not so great to you?
Yeah, so the bottom gray bars, those are our outlier channels, right? And we have gray upon gray. So I've got no signals telling me that we're having more buy signals, less sell signals. It's actually telling me just the opposite.
So what this is measuring down here, what we sometimes refer to as donkey channels, is that we are seeing less uptrends and more downtrends. That's not great. That's not what we want to see. We want to see more uptrends and less downtrends. So that's another reason why breadth isn't there. I'm going to give you one more hint on this, Joe. What do you see on the left-hand side that should give you cause for concern?
Yeah. So the left-hand side are our sectors. We can only see 3 green sectors. So that tells us all the other sectors are bearish. And what do we have here? Utilities, staples. They're not really the strong ones that are typically moving like a banshee, right? They're not your techs, for instance. So overall, it tells you that more sectors are bearish than are bullish.
That's right. And these are the defensive sectors. When these guys are lighting up, staples and utilities, that's a bad sign for the market. Look at you guys. I saw it coming through on the chat. Inkari, Eric, Patrick, Charlotte, Keisha. These are great. Well done. I am super, super, super proud of you, right? You're looking over and you're seeing over on the left-hand side that defensive sectors are starting to run. That is not good for the market. Not good for the market at all, because they're taking their money out of high growth stocks like tech, like banking, like communication sector, like discretionary, and they're moving it into safe haven stocks like Coca-Cola, Walmart, energy, not energy, but utility companies. That's what we see over here, because everybody needs utilities, right? Even if there's a trade war going on, you still need to pay your electric bill. Even if there's a trade war going on, you're probably still going to go to Walmart to get your groceries and your household items, right? So that's when these two start to shine. So this is really cool. Great job, Joe. Great job, everybody in the chat. I want everybody in the chat to pat yourself on the back and type your name in the chat. Type your name in the chat, because I'm proud of you for realizing what we have right here. This basically undercover data, this under the hood data. Most people have no idea what this is, but you're getting a daily training, daily education on doing exactly this. Right now, all of this comes inside of Outlier, and it's just 82 cents a day. So you definitely want to head over to outlier.com, pick up that annual pass. So now let's shift gears. We're not going to be getting into the market. Plans M and A are off the table. What about Plan ETF, right? Can we get into Plan ETF today? Let's take a look. Plan ETF, where's that slide at? Here. So we need uptrend in Qs and uptrend in SPY. We got that. We got that. Q buy signal and SPY buy signal. We don't have that. We don't have that. In fact, all major indices have sell signals. All major indices have sell signals. Well done, Dustin. I appreciate that. He did very good. Mike Ross, the boss. Exactly, exactly. So all major sell signals out there. There's no way that I'm going to get into this market right now. So we're back to plan, sit in cash, and don't F up. And that is basically getting into SGov, getting into whatever interest-bearing account that you can get into. Some brokers will pay you for that uninvested cash right in your account. I think Robinhood has a plan like that. If not, SGov is where you can earn. Right now, I believe the yield is around 4.3, 4.4%. And you don't have to do anything, right? You don't have to do anything. The market's looking very bloody right now, and you don't have to be. You don't have to be. So let's take a look at some of your stocks. What do you got? Put them in the chat. I want to see some of your stocks today. You guys pick the best stocks. I swear. Every time y'all are like, hey, take a look at this, take a look at that. I'm like, whoa, you guys are finding the ones that are doing awesome. Let's look at Coke from Plumber Fred. Coke. That is not Coca-Cola, by the way. Coca-Cola is KO. Coke is Coca-Cola Consolidated. Now, okay, now I got to know what this is. Hold on. What is the difference between KO? Tell me in the chat. What's the difference between KO and Coke? I don't know what that. Do you know what that is, Joe?
No, sir.
Okay, so Coke is Coca-Cola Consolidated, largest bottler. Well, look at that. Where our purpose is to honor God in all we do, to serve others and pursue excellence. Wow. You don't hear that from a press release very often. And then Coca-Cola Company, Coca-Cola Consolidated. This is the beverage company, and this must be the bottling company. Look at that. We learned something. At least that's what I'm guessing. One is new Coke. The other is the original recipe. Oh, very good. I like that. I like that. Okay, so we'll look at Coke and Coke. Let's look at both of them. So that buy signal came through on Coke, C-O-K-E. And okay, so this is in the staples sector. So this actually looks great. You've got the whole staples sector lined up on fear and greed going up, right? Less fear, more greed. You've got the breadth coming through. And then you've got the trend, the buy signal, fear and greed growing on the stock. And then looks like you've got room to an outlier block. Let's double check on this chart out here. Yeah, you've got room. Oh man, this is beautiful. This is what you want to see. A 10 over 20, price over 50, the outlier trend template in place just like this. Where did that buy signal come through on? That was on October 9th. Here. Here. Now, once it passed that order block, it's already gone up 6% in 5 days. Man, that's doing great. That's a beautiful stock. Now, what's cool about this, Joe, is even though I'm not trading it, right? We can look at this objectively and we can say, okay, if it had set up on that date and we had seen an order block right there, right? We would have passed on it. However, we now have the data to prove that we can take signals that are up to 5 days old, what we're calling second chance signals. So if you decided, hey, you know what? I'm not going to take that because it's right in this order block. We need overwhelming buying support to get through this. And it did. You could then take it on the next day as a second chance signal. So I think that's great. I'm very excited to use these second chance signals because that'll get you in something like this. Now let's go to Coke, KO, which has a bearish trend and it's got a sell signal. Fear and greed's rising and no outlier blocks, at least for a little bit on there. Isn't that interesting? Coca-Cola and Coca-Cola Consolidated have two different setups here. Two different setups. Look at that. Look at that. Oh, 10s over the 20 prices, slightly over the 50. That could be the start of something great. Running up into earnings. You have to see. You have to see. That was a great one, Fred. Thanks for that. Let's look at Joby. Joby. J-O-B-Y. So Joby is in the industrials. What is Joby? When I hear Joby, I think of the Sony knockoff, right? Like the little iPod knockoffs, the little CD player knockoff. Do you remember those, Joe?
I don't. Nope.
Maybe that was Kobe. C-O-B-Y. Either way, when I hear Joby, I think of that. Joby Aviation Inc. So it actually has a sell signal that came through just 2 days ago. And so this one, it's 4 of 9. This would fall into a weak sell for me. Let's go look at the Joby chart real quick. Ooh, yeah. Tell me order blocks don't work. Right. Now, granted, when you're getting into an order block, you have a lot more leeway than if you're already in a trade and an order block develops. And that leeway is, do I really want to take this trade when I know that there's overhead resistance here? Probably not. This is a great example on Joby. Let's look at DRD long for Screech. Let's look at DRD. Let me make sure I didn't spell it wrong. DRD. No. Okay, so we don't cover DRD yet. Most likely it will be added in the next 2 weeks. We are adding 6,000 stocks and options, stocks and ETFs in the next 2 weeks. Bro, DRD is a monster. Look at this. I told you guys would find ones. Look at this, Joe. Joe, what would you say looking at a chart like this?
I would say I wished I bought it a month and a half, 2 months ago, but it looks great.
Joke.
I mean, the 10's over the 20, the price is over to 50. You've got no order blocks ahead of you. So there's nobody, wishing that they hadn't bought this and they're holding the bag. It looks great. If my plan told me to buy it, I wouldn't be scared to buy this.
Right. Now, Joe, the question is, where do you get out? Now, since we don't have the outlier buy and sell signals here, I would run what's called a trailing stop. And a trailing stop is honestly as easy as finding a moving average that it works really well with. Glancing at this, it's yet to close under the 10 period, the 10 EMA, except for one time. It seems to really, quote, respect the 10 period EMA. So that could be a great way to get out before it starts coming back. That's what I'd like to call a red light, right? Close under the 10 EMA, consider that a red light. That's not a great place to be. But right now, man, DRD is smoking. DRD is smoking on fire. Let's look at Celsius. The real Bane wants to, he wants to look at new stocks. All right, let's run new stocks. Professional YouTube channel here. And let's run the screener. And let's see what came through today. Okay, so for today, October 16th, we got one that pulled through today using my criteria. It is TerraWolf. That sounds like a cool name. Hey, speaking of cool names, have you heard of the company Anduril? No? Okay. So they're a defense contractor. They make cool, so I wasn't in the military, but I did work at Raytheon doing military contracting. And my projects were the Predator and Reaper drones and the missile targeting systems. And I just think all that stuff is fascinating. Super, super cool. But Anduril, they are a defense contractor, and the CEO is on the Joe Rogan podcast today. He looks like straight out the trailer park. I mean, he's got a nasty mullet on him. He just doesn't look like a super classy guy. However, his company's doing gangbuster stuff over there. So if you guys are interested in defense tech, that would be a cool Joe Rogan episode to check out. Anyway, back to TerraWolf. That name just made me think of Anduril. So this is in the tech sector. Fear and greed's not there. Breadth isn't there. But you do have the buy signal. You do have a big, beautiful trend. The greed is growing on this one. So let's go over to, what was that? Wait. I lost it. What was it? It was Wolf. WULF. WULF. Okay. So this is one of those times where I would always wait until the end of the day. And this is a stock that's getting impacted right now. It's down almost 10% at this moment, right? This is why I want to wait until the end of the day to get the confirmation that I want to see, right? Now, granted, this may still fit your trading plan just fine. And I would much rather be buying at the end of the day to see where this candle closes than buying it at the beginning of the day and watching it go down all day, maybe even hitting your stop. So TerraWolf, honestly, I'm not taking it because it doesn't fit my trading plan. And it definitely would be buoyed if the market and the sector were helping it out here. But let's go look at Celsius for the real Bane, definitely not the hammered donkey. He wants to look at Celsius right now. This is in the staple sector, so this has a good likelihood of being helped, buoyed by the sector, right? The staple sector got that buy signal came through on October 3rd. October 3rd, right there. So between there and today, close to close so far, up 10% so far, 9.4% rounded up to 10. man, that looks great, right? And this again is why we wait for the sectors to help us out. This stock may not have done all that well, but when everyone's moving their money over into a super bullish sector, boom, what do you think is going to happen? Big moves just like this. So Celsius is great. Just if you're looking to trade Celsius, I would definitely keep an eye on the sell signals inside of Outlier. Let's go to Juan Pipo, wants to look at VST. VST. Now, like I say, as we're going through these, I'm showing you the entry points, but we don't know where those exit points are going to be at, and I don't want to leave you out in the cold. So you definitely want to pick up Outlier. It's literally 82 cents a day when you grab the annual pass. It's nothing. New buy signal today on VST. This is Vistra Corp. It's a utility stock. So again, this one's going to print. This one's going to print because it's got 7 of 9. Let's go to VST on the chart. Honestly, this is a great start. We want to see 10 over 20, price over 50. And while it hasn't done much yet, the potential is there. The potential is there. In fact, let's go look at this real quick. The potential for 585% returns is there. That's not so bad. That's not so bad. So keep a watch on VST. This one could be a great opportunity. Optimus wants to look at UTSL. Let's go to UTSL. UTSL. All right, looks like we don't cover UTSL just yet. UTSL, but high likelihood that it'll be added in the next couple of weeks. So let's go to UTSL. Oh yeah, this looks great. So this is utilities 3x leverage. All right, Joe. So rather than going into SPXL or TQQQ, Optimus is looking at this and he's like, well, if utilities are printing money, how about triple leverage utilities? I like it. I like that thesis a lot, especially if the market is blood red and utilities happen to be the standouts. That could be great. Let's check in on this is now going to become a recurring theme here at Outlier. Let's check in on my SoFi shares. Let's check in on my SoFi shares. How Chris made me sell my SoFi shares. Let's go take a look at my SoFi shares. All right, SoFi, the stock's trending up, still has a buy signal. Fear and greed and breadth look terrible in the sector. The sector doesn't look brilliant whatsoever. In fact, it really looks like a topping pattern up here to me, right? You've got your moving averages crossing over. Joe, we're only down 5% today. Chris made me sell my SoFi shares. Joe, this right here is exactly, precisely, and we're going to end on this one because this is such a great example. If you ever wanted to know what a stage 3 topping pattern looks like, you are witnessing it in real time. You're witnessing it in real time on SoFi. But Chris, Joe, my SoFi shares. I don't care what you do. You do you. It's your money. But look at this, right? You had this big, beautiful stage 2 uptrend. Now you're seeing the moving averages crossing over. Now you're seeing overhead order blocks and a little support under blocks there too. Order blocks, under blocks. You do have earnings, right? Earnings can go either way. But to me, this looks like a stage 3 topping pattern. Absolutely, hands down. So I would not own SoFi shares, and I don't own SoFi shares. But if you do, Christian made me sell my SoFi shares. I don't care what you do with them, but I would definitely not be holding them personally. Joe, this was a ton of fun today. I enjoy hanging out with you and all of our outliers. Don't forget, we want you to go enter the U.S. Investing Championship. The cost of Outlier is less than the cost of entry into the U.S. Investing Championship. And then you're going to have a whole suite of tools to help you do as great as you possibly can. Wait a minute. Ryan says, I'm having a terrible day. And Chris says, SoFi shares made me smile. Aw, you're welcome, Ryan. I got you. That's going to be one of our meetings. No, you go, Chris, made me sell my SoFi shares. You guys have a fantastic day. Joe, if somebody were interested in doing 4 key things like saving time, making money, and then starting to trade with less risk, I don't know. I feel like that's a good idea. What would be the easiest way to do those 4 things?
Well, I would subscribe to Outlier, which I do, but I would also consider clicking one of these videos here and learning more about Outlier.
I like it, Joe. Thanks for the softball throw. You guys have a fantastic day, and I'll see you tomorrow morning.